Silver was showing some fighting spirit at the start of the year despite fundamentally seeming weak. How long did this rally last and what next for the price of silver? Welcome to our market analysis videos here at ZenFinex. For those who are new to the channel, my name is Connor Woods and I'm the Senior Market Analyst at the company, providing to you daily videos on market analysis and also educational content. Now for today's video, I'm going to be giving my forecast on the silver market for January 2022. I'm going to analyse the fundamentals first of all to allow me to have a bias when looking at the technical analysis. So much like gold really, silver experienced some form of what we'd call a Christmas rally. That time from Christmas to New Year where no one really knows what sort of day it is in the week. And also like gold, this rally was driven with extremely low volumes in the market as people enjoyed their holidays and their time off with their loved ones. And I've mentioned this previously, but this sort of environment isn't sustainable, and it's believed that this is really just blind optimism, or it was blind optimism. And the reason that it could be this blind optimism is down to the following reasons. First of all, we have the U.S 10-year Treasury Yields. They are rising significantly due to market pricing and higher inflation expectations. I'll explain a particular reason why in a minute. The U.S Treasury yield exceeding 1.6% as of yesterday, and now 1.7% as well, approaching 1.8%, which by the way is well over a 6-week high. And when you're analysing commodities, if you've seen my analysis before, you'll hear me talk a lot about U.S yields. Generally, high yields will put pressure on commodities, and this is something that we could see throughout January. It's important to reference the pandemic as well, as it could act as almost a bit of a saving grace for silver. It has done for other commodities in the past. The number of Omicron cases globally continue to rise. The US setting daily records for increases in cases over 24 hours, 1 million. The UK is reporting over 200,000 cases a day, it seems. And normally in a time of rising COVID-19 cases, because we've been so used to having COVID in our lives now, investors do turn to safe haven assets such as silver. However, it must be said that the symptoms of this variant are a lot milder, and the chances of being hospitalised from this variant are a lot lower. Therefore, we're seeing the likes of the UK and the US taking, I'd say, a calculated risk by riding out the wave. Will it work? Who knows, really. But it's likely to make this particular reason for buying silver in January, I think, a weak one. Attention has been focused on the Federal Reserve meeting minutes. This took place yesterday at 7 p.m. GMT. Now, monetary policy has always been a huge market driver, and it showed it again last night. It will continue to do that. We saw volatility really low throughout the week. As soon as we hit that Fed meeting minutes, bang, we had some massive increase in volatility. Now, the minutes signalled a hawkish stance despite the rising COVID-19 cases. It was strongly hinted that the central bank is likely to hike interest rates quicker than expected. The minutes said that the Fed could accelerate the pace of its bank asset tapering to calm the high inflation numbers that we're seeing. And what happened as a result? Yields spiked and commodities suffered, a theme I always mention. This is likely to mean that silver will test possibly the swing lows, which we're about to see on the chart right now. And let's take a look at that chart to mark those key levels. On the chart for this silver market now, and as you can see, if I zoom right in on the price action that we have at the moment, here we have that drop really, which did actually start today, but is a fallout really from the Federal Reserve meeting minutes last night. And if you'd had a look at my gold video, and I mentioned how if we do have more of a hawkish stance, then we could see silver slip even further. Now we're approaching some really key levels. A level I've marked numerous times, but it continues to be a level of real interest, is obviously this double bottom that we have here. And the reason it's a level of interest is I'll explain a few reasons why. You could class this as an order block which has now been mitigated before, which is fair enough. Hi guys, thank you for listening to this video. Just really quickly wanted to touch on a really exciting offer we have on the website. It's a limited time offer, and if you head over to zenfinex.co.uk, you will see the offer in front of you straight away. And this is that you can trade Forex on a standard account with raw spread plus 0 commission. And now ZenFinex is also an FCA and no dealing desk execution broker. If you are interested in this offer, you can get in touch with the team by clicking learn more, or you can simply go to open an account where you can start the application process. So we won't mention the order book, but we have got this double bottom support level, which some retail traders use as an entry level potentially for buying opportunities. Now the way I look at it is I see all this liquidity sitting below here, and I'll just mark that. What I'll do is I'll just put a little dollar sign underneath, and basically what this means is, I've explained before, if you are someone who is looking to buy the market at any of these levels, you're likely to have your stop loss just sitting below these levels here. So you can imagine the amount of sell stops that we have below here, and also the amount of buying stop losses that we have down here as well. This is just a magnet for pricing, and I think that really we're just on a one-way street down to at least this 21.4 level, which is going to be take profit one for any selling opportunities anyone's in at the moment. Other than that, what you can see over here as well, which makes this area underneath here even more of a price magnet, should we say, is we have this inefficient pricing that we have here. And I'll mark that as what's called an FVG, which stands for fair value gap, a concept that we mentioned before, a concept that's always in our Discord channel as well. Fair value gap, you can see the market was inefficient in its pricing along here, so we could see the market not just fall and take liquidity down here, but if it really does want to go lower, then we could see more of an expansive move down into these FVG, and to be honest, I can't see at the moment, with it being so fundamentally weak, why, maybe not for January of course, but we could easily have this level down here as one of our take profits. Say maybe even if we just filled the 50% of this level down at around $20 potentially is the take profit level for silver for January, which would be, I think, a great level for this market to go to. Alternatively, if you're not in the market at the moment and you are looking for an opportunity to get in, then what I'd look for, first of all, I'm not sure why actually this isn't, let's just mark this as green. Take profit January, I'll put extreme, make this green as well. I did have a template for it, but for some reason it wasn't working. Anyway, what you can see here is, I think that if this market was going to correct itself, and I'm on the 4-hour chart now, a really clean order block level to buy from. You can see everything's mitigated up here already. I think a clean order block to sell from, would be up around 23. If we can get an entry from there throughout January, if we do have a bit of a correction in the market, we could look to sell here. Stop loss just above, and we can target the swing lows down at around 21.4, which is around a 7R trade. Alternative, if you go on the 1-hour chart, people might think, well, the market's probably not going to correct as much as that, which I completely understand. So you could use the 50% Fibonacci retracement and look for an entry potentially on the lower time frame, like the 5-minute chart, for when we get into premium prices, which is anything above this 50% level. And as you can see, the first kind of level that sticks out to me straight away is what we have here. So maybe around 22.6, you could get a lot more of a tighter entry level to have a sell from. Obviously, of course, we're going to be targeting, first of all, that 22.1, not 22.1, sorry, 21.4, which is down at the swing lows where we have that support level, where we have that liquidity sitting underneath below. I think that is the key level to watch out for January. 21.4. How's the market going to react? Are we going to grab liquidity and go higher, or are we going to go straight through and start filling this FVG and open up our take profit at around $20? So no real buying opportunities at the moment. Obviously, of course, if we do get it goes without saying, if we do get a reaction from this support level, we could look for an entry if we have a break of structure on a long time frame. So watch out for that as well. I hope everyone's enjoyed this video. To conclude, $20 is my target for silver for January, and also we're looking at 21.4 as I think really likely that we're going to be falling down into this level. If you did enjoy this video, make sure, of course, you subscribed to our channel. Make sure you drop any likes on the channel, and also drop any comments in on the comment section as well. Where do you think silver is going? Is moving similar to gold, of course, at the moment. I know some people had some great comments on the gold video from yesterday, so keep them coming in. Other than that, I hope everyone has a great trading day. I'll catch you all for the next video, which will be tomorrow on the oil market.